You won the bet with nobody. Man, get the fuck out of here, man.
Whoa.
Please.
Whoa. Wrong one. But payday. You want payday. This is payday today. So in today's video, we're going to take a look at why I'm going to be bullish over the next couple of days in the market. Simple. I'm going to be bullish in these dips. I don't think that these dips are sustainable in the overall market. And we're going to get a bit of a bounce. And we're going to go over the reasons why I think we're going to get a bounce. All right, simple. So in today's video, we're going to take a look at the large tech stocks, crypto, gold, silver, the SP500, the NASDAQ, and the Russell. All right, so without further ado, let's get started with the video. Before we continue, I want to practice my poker face.
And who do you got for the Canelo fight? Canelo or Triple G?
IOF.
All right. Who do you got for the Canelo?
Sorry. Okay. All right. Guys, settle down. All right, settle down. All right. Let's get serious. All right. We have to take a look at the VIX. All right, nice and simple. This is daily time frame of the VIX. The VIX is very, very important. Okay, super important because it has an inverse relationship to the market. Essentially, very simply, when the VIX rises, the overall market should fall. Okay, it's opposite. If the VIX goes up, market goes down. Simple. What we're seeing right now is the VIX is getting a lot of strength. The upper level of the Bollinger Band here is vertical. And what we look at on the Bollinger Band is how far overextended we are to see a snapback pullback. Now, what this means is that when we're trading outside of the lower level of the Bollinger Band or outside of the upper level of the Bollinger Band, there tends to be a reversion back into the mean where price returns back inside. So, what's happening right now is that the level to return back inside is increasing so rapidly that the VIX can continue to rise without it getting extremely overextended. So for example, when the Bollinger Bands are very contracted, a big bounce to the upside would almost immediately return back in. The issue right now is that the upper level of the Bollinger Band is skyrocketing. Literally, it's skyrocketing. All right, as you can see, this blue line is literally it's going straight up, right? This tells you that the overall upside to the VIX increases, which is basically bearish for the overall market. Now, I don't think that that's, over the long term, over the next couple of weeks, yeah, we can end up seeing new lows. But I'm talking about immediately over the next couple of days. What I think can end up happening with the market is essentially the VIX is very far overextended. We should get a bit of a pause or a bit of a pullback over the next couple of days. We have Powell speaking on Monday as well. So we could get a bit more weakness tomorrow and then a bit of a rally over the weekend. There could be a deal over the weekend as well. And then heading into Powell's meeting, there could be a bounce. Okay, so that's the first reason. The VIX is very, very far overextended. The second reason is this is the NYMO. This is the McClellan oscillator on the NYMO with a chart of the SPX overlaid on top of it. So essentially, right, this is very, very complicated. Don't get overwhelmed, right? All this is what we're looking at is a bounce signal on the S&P 500. And the bounce signal is when, so all of this right here, so all of this right here is the NYMO. On top is the SPX, okay? When the NYMO is below negative 70, that almost always leads to a bounce, okay? So as you can see, I mapped out every single time that we were trading around or right below 70. And every single time we've had a bounce. So yes, there could be a bit of weakness afterward. But following this, there always tend to be some sort of a bounce. Leaning bullish always was the right decision. And that's currently also another thing that's going on. So this is over the past 5 years. We could put this on a 10-year chart as well. It's the same concept. When the NYMO is trading below negative 70, it tends to be a good bouncing opportunity. And if we end up getting a bit lower, if we make some new lows, those are also good buying opportunities. So I don't really want to be bearish over the weekend, primarily because number one, I don't think China is going to there's going to be some sort of a deal. Okay, in my opinion, there's going to be some sort of a deal. So that's one of the other reasons why I want to be bullish in dips. Okay. And of course, the next thing that I want to remind you guys about is this is a chart of the SPX seasonality. So the average, what occurs on the SPX over the past 20 years. And as we can see, in the end of October into the latter third of the month, there is a pullback, and then we end up being bullish. So regardless, yeah, we could have some weakness. This is a bit of weakness. We're in the middle of the month, right? We could see a bounce, maybe even another low, right? But regardless, every single dip is a really, really good buying opportunity. So if you time these well enough, if we can time these swing trades well enough, get longer term calls, the weaker things get, etc. I'm going to be going over them in all of the trades in my Discord server. So far, we've been doing really well. But these are a few of the reasons why I think I want to be extremely, more bullish leaning over the next couple of days, especially into the end of the month. The next reason is Bitcoin. So this is a daily time frame of Bitcoin. And we look at Bitcoin and the crypto market as a good gauge of how strong the overall market can be, because a lot of funds, banks, hedge funds, they are invested in Bitcoin. So the strength of Bitcoin or the weakness of Bitcoin permeates or helps solidify the overall weakness or strength in the overall market. So Bitcoin is at a very, very important level of support here. Really, really amazing. Very, very important trend line. This is from years ago that I have this drawn out. This is still one of my favorite charts to look at. So we are bouncing off of a very, very important support. This is not the time to really become extremely bearish. Yes, we can overshoot below. We can drop down to 101, 103, etc. I'm going to... do I want to share? Regardless, I guess I could share it, but I'm going to be looking at long-term swings now in crypto ETFs. So that's what I'm really looking at. And because Bitcoin is at a good solid level of support, it goes to show that, we can even itself out here. As Bitcoin starts to bounce, this bounce can essentially permeate into the overall market. So it's not as if Bitcoin is like at highs and like there's weakness being shown. Bitcoin is at a level of support and can bounce. So if Bitcoin ends up bouncing like this, that strength can, start showing in the overall stock market. Okay. And the VIX is also very far overextended. If the VIX fails at this level of resistance and pulls back, because the VIX has an inverse relationship to the market as well, if the VIX rises or if the VIX falls, right, the market should bounce. So there's a couple of reasons why the market should be bouncing. So that's just some speculation. Especially over the weekend, we could get a bit of a deal. There could be some positive news coming out. So any weakness, if tomorrow, for example, we get a pullback, I'm essentially just going to be leaning long a lot of our day trades. And I'm probably just going to be, I don't want to go too much into detail about like the strategies that we're going to be doing in the Discord. But yeah, we're going to make money. So I'm excited for that. And what I really, really love about Solana and Ethereum is that both of them are basically right around the 786% fib. So what I mean by that is if you take the fib level from here to here, right? From the most recent lows to this bounce, we're above the 786% fib. So this is not as bearish right? So Ethereum still showing strength compared to where Bitcoin is. Bitcoin made new lows, right, at a level of support. What's happening with the altcoins? Holding the lows, right? They're holding the lows, which is really, really good to see. So just a bit more reason to want to lean a bit long over the next couple of days. So we went over a couple of reasons. So now what I really want to look at is we're just going to zoom out, restart, recalibrate, and look at the large tech stocks one at a time with no bias and see exactly what can end up happening. This is a daily chart of Apple. Very simple. We have Apple holding above 245. Simple. Holding support. We're looking at tech stocks either showing extreme weakness or strength to see what the direction of the overall market can be. Apple is, we broke down from highs, right? Now it's creating a bear flag after another point of weakness. We could see a pullback to around 238 to 240. So there's a bit more room to drop. We're holding support. So this is that on Apple. Amazon, very similar. We're holding support. There's a bit more room to the downside on Amazon. We have support at around 208, 210, which would be the lower level of this falling wedge pattern. And as we know, falling wedges are extremely bullish patterns. So we're trading at the lower end of this falling wedge. We can end up bouncing off of this low, and we can end up retesting this 220 level on Amazon, and this would end up being a break to the upside. I would see a bit of a retest to the upper broken part of the trend line, and then a continuation. So we're seeing Amazon at a level of support. I would be very, very shocked to see if Amazon fails this falling wedge pattern. That would be extremely weak. But Amazon is at a level of support. So we have to take that into consideration. Google has been a delicious winner. It had another huge move to the upside today. Broke above the recent highs, but failed to close. We have this wick to fill on the highs here. But overall, this is a bull flag on Google. Even if we were to come back and retest 245, 247-ish area, this would still be a good spot to reload up on longs for another move higher. So in general, Google looks strong still. I would not want to be short on Google up here. I would rather be long on dips for Google. Daily time frame of Meta. Meta is also just holding above support. It's not going anywhere crazy. It's holding right clearly above support around 700. We're wicking lower, right, on the downward moves in the overall market, but we're holding above 700. Nice and simple. You cannot be extremely bearish on Meta either. We had a very large move to the downside already. To the bottom of the lows, almost 13%. Right now, we're hovering around 10% from the lows. Even if we were to drop, there is a bit more room to 680, which would end up being a really, really important level of support, 675 to 680. That could coincide with another move lower on Amazon and Apple. So there's, we're holding the first tier of support. There could be even more room lower, which would be a much more safer long opportunity, which is what we're really seeing across the board on Apple, Amazon, and now on Meta as well as Google, actually. Daily time frame of Netflix. So I didn't want to redo any of the drawings, right? So what we're seeing is it's right at the level that I was basically drawing out yesterday at 1175. We still have a bit more room lower to 1160 on Netflix. So this was obviously a really big drop today on Netflix. Solid red candle. Oh, and last but not least, we have Microsoft. So Microsoft is still holding above 510. But essentially what we're seeing so far out of these large tech stocks is they are trying to hold support. Google showed a lot of strength. We still have to take a look at the chip stocks, but so far what we've been seeing is that there have been levels of support holding or strength. And Amazon is showing a really, really bullish setup. Now, if those fail, then there is a bit more room to the downside, another 2 or 3% across the board on all these tech stocks, which would be a much safer opportunity. Now, the issue is it would be way too easy. It would almost be way too simple and easy, in my opinion, for us to get a pullback like that. Because it would be so obvious for people to want to lean long that I don't believe they would want to give that opportunity to the average person, in my opinion. That's the only real issue here. Because obviously, like across the board, obviously, on these large tech stocks, you're obviously seeing bearish momentum, right? It's clear as day. But it's so easy. Like, it just makes it way too easy and simple for us to just to just wait for a pullback. Yeah. And then go long there. It would be much more difficult and much more painful for people to miss the opportunity to go long now, and if we have a bounce. That is what I'm thinking would be the worst case scenario for everyone. Because right now, there's not many people long. Everyone is really looking for more downside, which makes sense because they're painting a very bearish picture. It makes complete sense. But this would be the most painful scenario for everyone in the market, because I'm not talking about Microsoft specifically, but if the overall market just ended up bouncing instead of making another low, while everyone was waiting for another low to go long, that would suck, because then, they would start chasing on the highs, and by the time they started chasing, it would be a good opportunity to take some profits, and then these people would end up going short again. And then this pullback, which is just a continuation of strength, when all of these people that missed the long would end up trying to go short again, right? It would just be another opportunity to go long, but they don't take it because they have a bearish bias. And that would be the worst case scenario, in my opinion. So I think that would be great. And the couple of reasons that I showed that I would want to be leaning bullish the next couple of days makes sense, in my opinion. So I really hope you guys take that into consideration. Let's go ahead and take a look at the chip stocks. All right, so this is a chart of NVIDIA. We're seeing NVIDIA basically failing at 185 for like 2 days in a row. Solid. Like, we opened at 185 2 days in a row. Failed exactly there. And now today we ended up, bouncing a bit. But it's just very interesting to see what NVIDIA is doing. Holding 180, failing 185. Clear as day, this is not a great bullish setup, right? But we're holding support. That's that, right? What we're interestingly seeing on AMD is strength. So AMD is continuing to show strength, basically tapping on the highs, which is good for the overall market, which is good for the chip sector, right? And ARM is also doing pretty well, holding above 170, still showing strength, not clear-cut bearishness, right? So it's doing well also. And then also INTC, chopping around at the highs. So we're seeing the chip stocks consolidating, not showing extreme weakness. We're seeing the Mag 7 not doing terrible. The Mag 7 are at support. There's another leg lower, essentially, but that leg lower would be another good buying opportunity. So, I mean, look, like the main bearish thing that we're seeing right now is the IWM and the financial sector. So, let's go ahead and just take a look at that then. All right, so the IWM on the daily time frame, we opened outside of the upper level of the Bollinger Band. Showed extreme overextension to the upside. What ended up happening? Reversed very, very aggressively inside. Where did we end up stopping? On the IWM here. Right at the 20 exponential moving average, which is the mean level for the Bollinger Band. Where did we end up opening today? Outside of the upper Bollinger Band. Where did we end up reversing back to? The average median line of the standard deviations of the Bollinger Band. So sometimes it just works out mathematically perfectly. So the IWM was the biggest loser today. Okay? Very simply, the IWM was down over 2%. The NASDAQ was down 0.3%. The S&P was only down 0.68%. Okay? The biggest loser and the main reason why the market is dropping, or why the IWM is really dropping, is the bank stocks, the financial sector. And where is the financial sector? It's approaching a very major level of support. Okay, what's happening? Where are we on the financial sector? We're trading outside of the lower level of the Bollinger Band. What ends up happening when we're trading outside of the lower level of the Bollinger Band? We want to return back inside the Bollinger Band. Perfect. So this is another real reason why I think there could be a bit of a bounce. There could be a bit of strength in the overall market. And this is very similar to Bitcoin, right? We had a overshoot below a prior level of support. Similar to Bitcoin. We had an overshoot below a prior level of support. Now we're overextended to the downside, right? We're overextended to the downside, guys. So it's just, there's a bit more room lower, but all of this, it's getting close to a level of support. You have to take that into consideration. It's obviously not a great sign that, the IWM is pulling back like this, so strong. But what is happening in the winners, the AI-related stocks are holding up. The chips, the tech stocks, they're holding up. They're at levels of support. Bitcoin is also at levels of support. And yeah, it's just overall, it's just a pretty multiple reasons to be a bit bullish. You don't really want to short. You don't want to short into weakness here, right? The main concept is you don't want to short into extreme weakness. This is becoming extreme weakness here. We're trading outside of the lower bands. This is extreme weakness. When it's like this, you want to lean long. You want to look for good long opportunities. That's essentially what I'm looking at, and that is my thought process. So I hope this makes sense. That's that for the video. If you guys want access to my trading, all of my trades, everything, the link to join is in my bio or down below. So I hope to see you guys there, and I hope you guys enjoyed the video. And Friday or Monday, this is what's going to happen. Like, I'm leaning bullish Friday and Monday. Any weakness that we see tomorrow or on Monday, I'm going to lean bullish into the weakness. Obviously with stop losses, obviously in a smart way, obviously, but these are the reasons why I'm a bit bullish. So I hope this makes sense. Hope you guys enjoy the video. That's it. All right. So I hope you guys enjoyed. Love you guys. Thanks for tuning in again. And genuinely, we've been having a really, really good couple of days in the market. And I hope you guys have as well. So, love you guys. Have a good one. Take care.